Hey everybody, I'm Paul Moore with Wellings Capital and Bigger Pockets. So happy to be here with you today. Today we're going to talk about this looming foreclosure crisis. Is it for real? Is it a hoax? Is it going to happen in your town? Is it going to happen in my town? I don't know, but we're going to figure it out. No, we're not actually. We're going to figure out what some of the variables are that are going to cause it. And I'm going to invite you to comment and tell me what you're seeing in your market. So let's start by you telling me where you're located. What's your name? Where are you located? What do you do? What do you think about the coming foreclosure crisis? And we'd like to hear from you today. And if this video is helpful for you, we'd love for you to share this on YouTube, Facebook. Give us a thumbs up, a like, a share, something like that. So there's a big debate out there whether we're actually going to see a real downturn in the real estate markets or not, whether we're going to see a lot of foreclosures or not, whether there's going to be distressed assets like 2008 through 2012 or not. What do you think? I'd love to hear from you because a lot of what happens here is going to be based on what we all collectively, all 300 and some million of us, think is going to happen. And so it's not just based on economics, it's also based on fear and greed and all kinds of things like that. So let's talk about it today. So hey, Nima Sherpa in Pittsburgh, Pennsylvania. What's going on in Pittsburgh? Hey, Brian in San Diego. Hey, Mike in Naples, Florida. Real estate's moving on up. Chinito T in New York, investing with Nick in Orlando. Hey, Brian Coons. Hey, Juan. Hey, Ruth. Hey, Mike in Houston. Okay, so it's great to see all of you. And we're going to jump right in. So I'm just going to do a super quick slideshow, and then we're going to talk about a couple articles that are trending on Bigger Pockets these days. So we're going to call this Crisis Investing 101. Is there a foreclosure spike in the works? And so hopefully you can see my slideshow here. We got a wonderful producer, Nikki, from Bigger Pockets, who's keeping those slides moving forward. So thanks, Nikki. So is there a foreclosure spike coming? Well, like I said, a lot of this is based on fear and greed. And Warren Buffett, one of my real estate and one of my investing heroes, says be fearful when others are greedy and greedy when others are fearful. Now, he doesn't mean literal greed as much as he means, be in a buying mode when others are selling, in a selling mode when others are buying. And so let's look at the fear and greed index, January 17th. Look at that. It was 89, almost, approaching 100. Pure, like nothing could ever go wrong. Everything's going to keep getting better forever mindset. But 7 weeks later, oh my goodness, it was down to 6. Extreme fear. People were selling and panicking. And as you know, one of the benefits of real estate is it follows the equity markets sometimes by years. And we're going to see a slide on that in a few minutes. Fear and greed index this afternoon is running right about neutral, right in the middle. Okay. So the question is, what's going to happen in the foreclosure world? Look at these signs from 2008 to 10. Foreclosure, foreclosure, foreclosure. So is the COVID virus going to cause a downturn in home sales? Well, Aaron Amestachugi, I probably said your name wrong, Aaron, I'm sorry, from Austin, Texas, previously of Sacramento, California, is a big-time hedge fund investor, and he's a Bigger Pockets writer. As of now, he's a new writer. He says, look what's going on in Texas. From March to July, the foreclosure sales, look at that red line along the bottom, dropped to about 0. They went from, somewhere along the lines of, 10,000 a month in Texas down to 0. And then the blue line on top, the upper blue line there, postings for foreclosures have dropped from in the 40s down to, look at that, just in the low 20s. Okay. But he says that foreclosure sales aren't even happening. He says one after the other foreclosure sale in his county near Austin, Texas, is being canceled. Sheriffs sending people home. So no foreclosure sales, no court processing. And so he believes there's a huge pent-up demand in like in foreclosures. So this is only a predictive slide. Now, I think our friend Aaron drew these vertical lines here on the end because he's predicting what's going to happen in July and beyond. He says that with the job losses, delinquencies, forbearance, everything going on, it's eventually going to come home to roost. And I completely agree with him. I think it's going to. And that doesn't mean we're happy as real estate investors. We're not happy that people are losing their home. We're not happy that people are losing the value in their house. But we want to be wise. You know, they say that you should be wise as serpents and harmless as doves. So hopefully we can do that here and not hurt anybody in the process. The capitalistic system allows, you know, it just naturally produces winners and losers, and it's not our fault if anybody loses their home. We can actually help people, and I'm going to tell you how later. If anybody asks me, what is the win, 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 win to help people in these type of situations, I'm going to tell you how to do that. So get a pen and paper. I'm going to give you a few notes and tell you how you can help 4 different parties, including yourself, if a foreclosure crisis happens, and how you can help people avoid foreclosure, help bank shareholders do better with their investments, help yourself, help sellers, help buyers, help renters. You're going to love it. So ask me how we get the 4-way win later on. So look at the U.S. foreclosure activity. Now, this is actual foreclosures, and this is from Atom Data Solutions. Our friends over at Atom have given us a lot of data recently. We've been using that. By the way, if you're a Bigger Pockets Pro or Premium member, you have access to BP Insights, and Nikki's going to tell us how to get onto BP Insights. BP Insights is a new service. And if you're a Bigger Pockets Pro or Premium member, you're going to get access to BP Insights, which gives you a way to think smartly about all this data that's out there. You're going to learn to be able to think smartly about it and think about how you can make wise investments. So here's U.S. foreclosure data. You can see this is as of November 2019. You can see that we've had a continual drop in foreclosures. And as we saw on the previous slide, they're at a standstill now, but we believe that they're actually going to go up. We feel like it's inevitable. I agree with Aaron. Now, this is the Fred data, and this shows home prices. Now, home prices aren't the same as the number of foreclosures. Now, notice here that foreclosures hit a peak in, I shouldn't do this, I know, 2008 and 2009. And they were way on the downturn later in 2010, 11, 12. But look at home prices. Home prices didn't hit their bottom till 2009, late 29, and early 2010. That's when prices hit a downturn, hit the bottom, I should say. So think about that, folks. Think hard about the fact that you've got time. You've got time to build your team, build your tribe, build your investors. You've got time to figure out what to do, because if there really is a lag in prices like this, in theory, there's going to be a lag, according to Aaron, in the number of foreclosures and the timing of the foreclosures. There'll also be a lag in pricing. And with the U.S. government and mortgage companies and banks working together to help homeowners out and not foreclose on them, we believe there will be a significant lag, and that once this does eventually get rolling, there's going to be a even more significant lag in home prices. And so take a look at this, think hard about this, and realize that this lag in home prices could be, again, if it happens, we don't want it to happen, but if it does, it could be to your benefit as real estate investors. Speaking of real estate investors, our own Matt Faircloth has a very different opinion. A lot of you watch Matt on here, and Matt's a good friend, and I really appreciate Matt. But he has a different opinion. He has an article called "Will the U.S. Face Another Foreclosure Crisis in 2020?" And in this article, Matt is basically telling us that he doesn't believe that this is anything like 2008 to 2012. Matt believes, he said, that is then and this is now. Sounds a little bit like Dr. Seuss. He says that all the no-doc loans and all the easy money and all the lack of lending restrictions cause all kinds of toxic loans, toxic portfolios. We saw this in The Big Short. And when these loans came due, massive sell-offs of paper were happening. And there were just all kinds of problems that were caused by that. We had Lehman Brothers go down. We had others almost go down. Goldman Sachs almost went down. And Matt says this is very different. He says banks are part of the solution this time. They're not foreclosing. They're forbearing. They're helping people. They're better capitalized. Investors are better capitalized. Loans aren't underwater to the level they were before. Of course, we know that the potential of sinking values could cause them to be underwater. So Matt really believes that a lot of people are going to be able to refinance, even if they're in trouble. Matt really believes that we're just not going to see, we might see a 5 to 10% drop on commercial property values because of a 5 to 10% drop in income, but we won't see the foreclosure rates like we saw before. He believes that we will actually see better values, not from foreclosures, not from banks, not from distressed sellers, but from tired owners. What does he mean by tired owners? Well, Matt basically means that there are people who were already planning to sell, already wanting to sell, already tired of being commercial or residential real estate operators, and were ready to sell. And he thinks a lot of them will just be, I'm pretty much done. He thinks that's where the deals are going to come in the coming crisis. So, Crisis Investing 101, foreclosure spike incoming. Who knows? We got Aaron's side of the coin, and we got Matt's, and we got my opinion, which is leaning more towards Aaron's. But I want to hear about you. What do you say? Mike Gonzalez says, I do not think we will see a 2008 foreclosure process like we did before. And Tomcat says, it's funny how some people like me want the crash in order to succeed, and some people want prices to go up. And so I understand that. Somebody says, where's a good place to start investing for rental income with 10K? Says day in the life, father and son. Well, cool picture. Okay, so I mentioned that there are, and by the way, Nikki's going to go back through some of your comments and be flashing those on the screen. If they're not questions, she's going to put up some of the comments just so we can all see what you're all saying. But I'm going to give sort of an in detail answer to this. If you got $10,000 or $100,000 and you want to invest in real estate, one great way to do it is by investing in subject to deals. Now, subject to deals are deals where you're going to keep the current mortgage on the property. So the seller, somebody wants to sell, let's say they're in trouble. Let's say they're really wanting out of the house, or let's say they've had the real estate on the market for months or years, and they're just really done, and they're really close to losing it to the bank, or they need to move to a different town. Maybe they move from California to Texas or Denver, right? Well, they want to sell really bad. They can't sell. Now maybe they're underwater. So what you do is you take over their mortgage. And so you're buying it subject to their existing mortgage. Now you may have to pay a few payments to catch them up, and that's where it might cost a few $1,000s. You take over the mortgage, you put it in a land trust, and then you turn around, mark up the price to a future value, let's say 3 to 4 years down the road with inflation and some profit for you. And then you sell it on a lease to own basis to a tenant buyer. Okay. And so if you haven't read Brandon Turner's book, Nikki is going to tell us the name of Brandon Turner's book and put it on the screen so you know right where to get it. Brandon Turner will tell us how to invest in real estate with low or no money down. And he's got lots of great ways to do it. Another, Chris Prefontaine, a Bigger Pockets writer, also has a book called Real Estate on Your Own Terms, and he teaches us that as well. So there it is. The book on investing in real estate with no or low money down is available at biggerpockets.com/store. And that's from our own friend, Brandon Turner. So Scooter Wisdom says, so just to wrap that up, that's how 4 people win. First of all, the bank wins because they don't get it back in foreclosure. Number 2, the seller wins because their mortgage doesn't get foreclosed upon. It doesn't destroy their credit score. Number 3, the tenant buyer wins because let's say they got their credit smeared or smashed in the recession or otherwise, and now they get to buy into a house through a rent to own. And number 4, you and your family and your investors win because you can make a profit. By the way, you get 3 paydays with this. Number 1, you collect a deposit from your tenant buyer up front as the middleman in this lease option sandwich. Number 2, you get a monthly profit. So for example, my friend Lorenzo and I did a home near Roanoke, Virginia once, and I think the monthly mortgage was like $800 and we were collecting $1,200 a month. So we put a little profit into our pocket every month. And number 3, the big payday comes when the tenant buyer turns into your buyer and actually closes, and you can make anywhere from a few thousand up to maybe 100,000 when they close, depending on the value of the property and they pay off on the mortgage. So it's a real win-win for everybody. I have not found any downside to this at all, except it takes some shoe leather and some time to find these deals. Okay, so we're going to hit the questions hard. Now, how do you find these subject to deals, says TR. The answer is you look for properties that have been expired, that have been on the market for a long, long time. Maybe they expired after a year on the market, maybe 2 years on the market. Maybe the pictures are bad, the marketing's bad. Maybe it's near a power line or something. And, so honestly, it's funny. You wouldn't be able to sell certain houses because it's, let's say, near a power line or a trash dump or whatever, but you could possibly sell them to a tenant buyer because they're not as picky, or you might just pick it up as a rental and just keep paying on somebody else's mortgage. I'm telling you, you don't have to get the debt. You don't have to have much equity. It's a great way to pull this off. Charmaine says, what's the name of Brandon Turner's book? Hey, Charmaine, good to see you again. And there's the answer. TR says, okay, how do you find these? Brian Kuhn says the majority of foreclosures to come will be from foreclosures that would have already happened pre-COVID that got postponed because of COVID. Brian Kuhn's, great point. And I think that is very likely the case. In fact, Adam Data Solutions picked their top 50 counties in the United States where this is likely to happen. And we reviewed that a number of weeks here on the show. And it's possible I'll be able to find that map with those top 50 counties. But if I can't, I can tell you that there are, you can find those on ATTOM, Adam Data Solutions, as well as a few articles on Bigger Pockets. Bigger Pockets. I try to remember who wrote that article, but I can't remember right now. But anyway, I'm looking for that, and I shouldn't be. I should be back to answering questions. So Darius says, with a ton of businesses closing and counting, like 3,600 people laid off from Cirque du Soleil yesterday. And it just keeps happening, folks. This is not ending. With a ton of businesses closing, as well as likelihood of more companies allowing to work from home, do you think the commercial real estate market will change forever? Yeah, I think that the office market is going to be in a real hurt. I mean, you've already got retail that's just been smashed. 12,000 retail establishments shut down in one of the greatest economies ever in 2019 in America. Estimated 20 to 30,000 this year. So yeah, I do believe it. I think office is the next one to take a hit, Darius. Great point. So is subject to also discussed in Brandon's book, says Phaedra Robinson. Yes, that is in Brandon's book. And I think that it's all, and I know for sure it's in Chris Prefontaine's book, Real Estate on Your Terms. So that's 2 places to learn about that. Lone Star says, what's a great course to learn about dealing foreclosures to get ready? I would just get those 2 books, Lone Star. I can't recommend any courses, but I would just stay plugged into Bigger Pockets, get your premium or pro membership, and stay plugged in here. And then you will learn everything I think you need to know. John B says there might be a big real estate downturn because if everybody thinks there's not going to be one, that usually is. And if they think the other way on anything in life, it goes the other way. Well, John, I agree. That's true for a lot of things in life. I really do believe markets respond mostly to what people think and feel, not necessarily the opposite. So Keith Gihan says, how risky is triggering a due on sale clause with subject to? Keith, you look kind of young. Just kidding. Okay. I have talked to people who've been doing this for years and even decades. I have never once, not once, heard of a due on sale clause being triggered. And that is the first question you should be asking, Keith. Great question. There's a due on sale clause in every mortgage, and it's not triggered as long as it's placed into a land trust. And you put it in a land trust, and honestly, it's not a matter of public record who is paying that mortgage now and who is on the deed, because the land trust is on the deed, and it's not an individual name anymore. Hey, Kimberly Stewart, Investing with Nick, says Universal Studios is taking a big hit. Tell me more about that. I hadn't heard that, but it makes total sense. What do I think about the Tampa Bay future market, says Scooter Wisdom. Tampa Bay, 2 million people in that market, second biggest market in Florida behind Jacksonville. I think Florida is my favorite place to invest as a knowledgeable investor. As a knowledgeable investor, which I know you all are because you're on Bigger Pockets, Florida is one of the very top places to invest because they have huge ups and huge downs. Because of these huge ups and huge downs, we know that real estate in Florida, if you buy at the wrong time, is the perfect place to be crushed and lose money. If you buy at the right time, which I know you're all going to do because you're listening to this show and you're on Bigger Pockets, you are going to be in a position to have incredible opportunities. By the way, I said a minute ago, I was looking for that county ranking of where the highest risk and lowest risk markets were from COVID-19. Nikki, I've got it on the screen right now. So you can see those really dark purple areas are the highest risk. How it will affect counties based on real estate prices. Now, our friend Brian Davis, an author at Bigger Pockets, and the Spark rental guy, has pulled together these wonderful maps. And a lot of these counties are in New Jersey, and a lot are in our favorite state, Florida. So you look at Tampa, and you can see that Tampa Bay area is ranked among one of the worst counties. Now you can see, I think Tampa is it in 1-5 or in 12? Okay, I can't see which area it's in. But anyway, Tampa Bay, you can see it's either the worst or second worst area. So my answer to that is it's a great place to invest if you know what you're doing. It's a horrible place to invest if not. Hopefully that gives you a good overview. Brian Kuhn says, due to a low supply and high demand, when foreclosures hit, I feel like a majority of markets will start to balance, not necessarily become a buyer's market. What do you think? Brian, I just don't know. 4 months ago, I never would have dreamed we'd be where we are. Speaking of Florida, my friend just got back from there. It's $50 fine if you're caught without a mask, $500 the second time, and $15,000 the third time if you're caught anywhere, even outdoors, without a mask. Now, that's what I heard from Miami. It's just a crazy time. Who knows, Brian? I'm just going to pass on that. I just don't know. Brian Bell says, what legal entity should I use for active real estate investing, like flipping and wholesaling, a land trust or LLC? Hey, Brian, I would recommend a land trust for the subject to deals, and then an LLC in general. Canadian Haitian says, any recommendation on good investor, lawyers, title companies knowledgeable and subject to transactions in Florida? No, I really don't. If somebody does, please put that out there. I do know that Chris Prefontaine, again, one of our Bigger Pockets authors, has done some deals in Florida, and he would absolutely know. So you can check in with Chris. Bezos says, instead of traditional commercial investing, do you think it's wise to invest in more industrial commercial type properties, those that cater to businesses where employees can't telework? I don't know. I'm having a hard time. Your question makes sense, but I'm having a hard time coming up with an answer. Maybe some industrial. I've heard some industrial properties, some logistics type properties, warehousing type properties are actually, doing well. And so I think that's very possible, Bezos. I think I'll leave it at that since I don't really know. Investing with Nick says Universal can't afford to close the parks. The hotels are empty. Employees are still laid off. Hope to learn real estate. I'm scared to lose my job. I am so sorry. I really am, from the bottom of my heart. And I'm sorry for the millions of others who are in your shoes. And I really, really hope that, I really, really hope that things bounce back soon. Mark Phil Frank says, I was incorrect about the mask in Miami. So yeah, I heard that actually from two different people in Miami, but that doesn't mean I'm right. So if you have the right data, please let me correct it. Please tell me. Justin Murphy says, do you think once the moratorium on evictions lift, it will cause a flood of evictions? Yes, I do, resulting in foreclosures and ultimately a lower overall market rent. People have to live somewhere. Well, will the evictions cause foreclosures? Well, I think lack of getting rent will cause foreclosures. And I think that, a lot of states like California, Illinois, et cetera, I think they've got to realize that landlords are going to be suffering if they have to keep paying their mortgage, but they're not collecting rent. Places like Washington State, I think there's going to be serious foreclosures. I really got to believe that. And so I respectfully disagree with my good friend, Matt. But I would love to have Matt on here and tell me why I'm wrong. And I hope Matt Faircloth is right. I hope Aaron Mestachugi and I are wrong. But I can't help but think you're right, Justin, in what you're saying. Angel says, what platform can we use for a newbie in property investment capital on hand? Can you rephrase that, Angel, and just ask me again? Just give me a little bit more clarity on that. RG says 3 of my 5 tenants are refusing to pay their rent for the last 3 months. Truly sorry. RG, where are you located? Where are those tenants? Jeff Dong says, what is the best approach for house hacking in an expensive market like LA? Well, I think my best approach would be to conserve cash and wait about a year, Jeff, and I think you'll have a choice of a lot of duplexes that are highly overpriced now. I just wouldn't do it right now. Jennifer Argison Blurton says, if a real estate market goes down, do you think 1031 exchanges will be more difficult to stay within the 180 days just because people may not be as accessible due to business closing or banks not moving fast enough? Yeah, Jennifer, of course, you probably know, since you asked a great question, that the 1031 exchange deadlines have been extended to at least July 15th. I predict they'll be extended again. Opportunity zone extensions have gone all the way from April out to December 31st to make something happen in an opportunity zone. I think there's going to be some trouble with that. And that's why I think a lot of people are turning to Delaware statutory trusts. And Jennifer, if you don't know about that, ping me. I can tell you more about it. Delaware statutory trusts are a much easier way. If you have a 1031 exchange and you are running out of time, or if you don't want the hassle of managing a property anymore, you may want to consider a DST, or Delaware Statutory Trust. And that's what I would recommend. My company is partnering with some others to set one up right now and trying to get it up and running before July 15th for all the people who are going to run out of time. So DRU says it will definitely be a buy and hold. I missed the first part of that. Lou says, as a beginner, should I buy an investment property in a low-cost market and rent in a high-cost market, or should I buy a house hack in a high-cost market? I don't know if those are the only options. So there's a rent-to-price ratio out there, and again, our friends at BP Insights have done a great job nailing this down. If you can find markets in great rent to price rent to price ratios, you can possibly have a good cash flowing investment. And I will tell you that some great rent to price ratio markets include Detroit, Arlington, Virginia, Birmingham, Alabama, and there's even one place in California, I think, that has a good rent to price ratio. So the rent to price ratio is right here, Nikki. I'm showing it here on this Bigger Pockets chart. You can put that up if you'd like to. So the rent to price ratio, the best of Detroit is by far insanely. You recover 38% of your gross average house payment. It's crazy in 1 year in Detroit. There's other stuff to deal with, but Birmingham second, Cleveland, then Baltimore, Arlington, Virginia, which is quite a shock, but I think that's because there's a lot of condos. Philadelphia, rents just went up 11% in Philadelphia, by the way, and part of that is because of the California or the New York City effect. People leaving New York in droves. Philadelphia is the next big city as they move a little bit southwest. You can screenshot this, or we can leave it on the screen for just a minute. Now, I mean, Oklahoma City, Houston, Hollywood, Florida, that doesn't mean those are bad markets. Look, they're still in the top 25 of all the 330 or so markets in the US. They're still up there. These are where you're going to get some, basically the price of the house compared to the rent is better than average. And so I really hope that helped you, Lou. And I don't have a real answer for you because I just don't know enough about your situation. Robinson Ann, welcome back. Robinson Ann, quantitative easing will not help this cycle. So thinking worse than recession, depression. I hate to say I agree. White collar workers are now starting to lose their jobs. They'll tap into severance, then retirement, and then it'll take some time for foreclosures, several months. So I say late 21 or 22. My thought, LOL, says Robinson Ann. I actually have been saying the same thing for some time. I'm right with you. In fact, I completely agree. I think some of my favorite investors out there, including Howard Marks, including Ray Dalio, including others, have a very similar thought. And I personally have a theory that the reason Warren Buffett is still hoarding his $138 billion cash is because he believes there are deals coming, that the little downturn we had from late February through April, that's not the downturn. The downturn is still coming. RG says, my 3 tenants are working for me until COVID clears. One's a plumber, new bathrooms and kitchens installed for rent. Well, that's good to hear. Hats off to you, RG. Good job for setting that up so they could do that. So here we are, 35 minutes into our hour, and you guys have amazing questions today. And so thank you so much for doing this, for putting these questions together. I'm amazed I get to do this, and I'm going to try to fly through a bunch more questions. So let's see what we have here. So DRU says, I was wondering if I should buy a property this month in Jersey that would get me $600 a month or wait a year from now. Both floors, tenant occupied. I would hold the house for a long time. I'd honestly wait. There's just a lot of uncertainty right now. I really think if you're willing to wait, you'll be happy. I can't prove that. I could be wrong. I've been wrong many, many times. I got a podcast called How to Lose Money after all. And so, but I hope I am wrong, but I think it would be good to wait. That's my opinion. John Rivera says, when I'm looking at, hey, John, I'm looking at properties. I search for hospitals, colleges, groceries, any other key places you're looking for while looking at properties. Yeah, I like to be in towns where multifamily, where there is a mix of healthcare, government, and colleges. So those are 3 big things I look for. If you're talking about the sub-market, I'm actually not as excited about colleges as I have been in the past because of the possibility that they'll go online. So sorry for yawning there. That's terrible. Justin Murphy. So anyway, those are the things I look for. Justin Murphy says, any tips on increased appraisal value after purchasing 270 days ago? Currently 3.5% down FHA, hoping for a refi into a 15 to 20% equity in a conventional and losing PMI quick. I mean, basically, I assume, so if it's an FHA, I assume you're talking about a house you're living in. I just do everything you can to make it look beautiful. Do as many low-cost improvements as you can. Appraisers are people too, though you may not believe that. And they're going to be influenced by the look, the flowers, excuse me, the flowers and all the beautiful things around. I haven't got COVID. Don't run. Seriously. Just a sneeze. But seriously, I would recommend you just beautify it as much as you can, as inexpensively as possible. Stage it like you're going to do it to sell the home. I hope that helps. Okay, what's next? How would you, Scooter Wisdom says, what is better, pay cash or leverage low rates? I would leverage low rates, of course, up to safe levels, Scooter. Hopefully that helps. Sunday Retail says, how would you recommend buying REOs using debt? Well, REOs are real estate owned properties. That's bank owned properties. It's commonly known as REOs. I would try to get the local or regional bank to actually finance it. In other words, you go in and say, look, I'll buy your property, but at the same time, I want to use your debt. I hope that helps. Someone says Richmond, Henrico. I'm going to say it right. Henrico? Is that right? I know it doesn't look like Henrico, but anyway, that's the county around Richmond, Virginia. Alex says they have those characteristics. You're absolutely right. Richmond is a phenomenal growth market, by the way. Mr. Cine 8 says, is investing in cheap housing, investing in mobile home parks or RV parks a good way to start? Yeah, I don't really like investing in Class C unless you got a fantastic operator. So a lot of people who have invested in Class C in the past have got out of it, but a lot of people are jumping into mobile home parks. I did a show on here maybe a month or two ago about investing in mobile home parks. And I actually have an ebook that you can get to teach you to invest in mobile home parks, not RV parks, and also in self-storage. Did you all know that Berkshire Hathaway, Warren Buffett's company, is involved in both self-storage and mobile home parks? They don't own either one of them, but they both provide key roles in the service industry, selling and financing those industries, both of them. So pretty interesting. It's recession resistant. I love it. Arlington, Virginia, what do you think about tax liens? Kimberly, I know about buying tax lien properties and tax lien certificates, TLCs. I just don't know about specifically doing it in Arlington. And I don't even know, even though Virginia is my state, I don't know anything about buying tax lien certificates in my state. If anybody here does, please answer Kimberly with a better answer than I, hopefully. Luis Rivera says, do you think self-storage facilities will be cheaper to buy in the next year because of COVID? There's going to be some serious foreclosure action in self-storage, not in mobile home parks at all, I don't think. But because some people built them in places like certain parts of Nashville, Boise, Charlotte, some people overbuilt, like they built them on top of each other almost on the same block. And there's going to be some foreclosures. I think it's not because of COVID, though. I just think it's because of oversupply in certain markets. There are other markets that are phenomenal to invest in self-storage on. And I love investing in self-storage. Angel Latimer says, as a newbie, where should I look to start real estate investing with COVID-19? I would learn everything you can. And this goes out to everybody on here, not just Angel. I would learn everything I could about buying zero or low money down properties from Brandon Turner and from Chris Prefontaine. And I would gear up to buy subject to, that's subject TO2 deals, subject to the existing mortgage, or lease option sandwiches is another way to look at those. Tahid says, where can I get your ebook for mobile homes? Reach out to me, Tahid. I'd be glad to. You can reach out to me. I'm Paul Moore, and I'm here on Bigger Pockets, and I'd be glad to share that free ebook. Warren owns Clayton Homes. Oh, wait, A Cruel World says, I don't think you can buy tax lien certificates in Virginia but you can buy tax lien properties at an auction. Thanks, a cruel world. Thank you for saying that. Maybe that's why I never heard of it, even though I've lived here for 23 years. Warren Buffett owns Clayton Homes. I believe they are the largest mobile home manufacturer in the country. That's exactly right. He also owns 21st Mortgage, which finances mobile homes. And he also owns Berkshire Hathaway, at least partially, and they do loans for self-storage and mobile home parks through Fannie and Freddie, agency loans. Why are trailer parks, Big Al says, alcoholic, are not really built from the ground up in recent times, or are they? I just never see them. Big Al, there's about 10 being built nationally per year. So you just got to drive out into rural areas and find them. There's about 100 supposedly being torn down or demolished every year, by the way. And so that is meaning that that means there's obviously a decrease in supply. There's an increase in demand every year. I love mobile home park investing. Brandon Turner does too. Why are they not built from the ground up? There's at least two major reasons. One is NIMBYism. And that means people say, not in my backyard, NIMBY, NIMBYism. And also another reason is localities say they place a huge tax burden because of fire and emergency services and schools and all that, but they pay very little tax. A third reason is they're hard to make cash flow. It takes about 10 years or more to make a brand new mobile home park cash flow. And there's just no reason to do that when you can buy so many things that can cash flow from day one. Jeff Ong says, hello, Paul, would you recommend working with reputable turnkey providers to get started right now, or should I wait to see how this pandemic impacts prices? Jeff, I know that you, just like me, are probably chomping at the bit to go out and invest. And I am investing in mobile home parks and self-storage right now for different reasons. I would wait. I really believe if you can be patient, time rewards the patient, and time is the friend of the patient investor, says Warren Buffett, and the enemy of people who are in a rush. I added that, Paul Moore. Anyway, kidding. One Southgate Realty says, do you think families will look to move out of major cities into rural areas with smaller populations because of COVID? And I would add, because of the next and the next and the next pandemic scare. Yes, I absolutely believe that. Christian Zan, and I think I see it happening already. My son is a broker in huge land in Southwest Virginia. And he is seeing a continual stream of people buying land in this area. He's not a broker. I mean, he buys and sells land himself. Scooter Wisdom says, how do you manage properties out of state? Do you trust property management companies? Yes. You have to find fantastic property management companies. And the best way to do that is to get our own David Green's book. And David Green's book in the Bigger Pockets bookstore will teach you how to invest in out-of-state properties. And it's called Long Distance Investing by our own friend, Bigger Pockets co-host David Green. And so you should pick that up if you have any thought of investing out of state. I don't really think I answered the long distance, the earlier question that well. Beginning investor checklist. Oh, when I get this, Antonio Aguilar says, Bigger Pockets Pro membership. Brandon Turner book on how to invest. David Green. Oh, that's just what we were talking about. And then read Jay Scott book on negotiating. Now, I hadn't said that. Jay Scott's book on negotiating would definitely be a plus. And I would also consider, if you're going to be a passive investor, picking up Brian Burke's new book from Bigger Pockets. Brian's book is called The Hands Off Investor, not the hands-on investor, the hands-off investor. He's talking about how to vet syndicators and funds to invest in as a third party, if you will, passive invest. Christian says, is virtual wholesaling reliable? I don't really know that much about it. I would pick up a Bigger Pockets member. Joe McCall has a book called Wholesaling Lease Options. It's a lower risk, easier, faster way to get in than wholesaling lease options from Joe McCall. I think you can find it somewhere. He's all over Bigger Pockets. Jared Stash. Hey, Jared, people move where there are jobs. Retired people may move to rural areas, but people who need to work don't really have a choice. Jared, I think I would argue, though, that now more than ever, people have chances to work virtually. So if they want to live on Smith Mountain Lake in Virginia, they can do that and they can telecommute. I sold a house to a guy. I have a real estate team at Smith Mountain Lake. We sold a house to a guy who's a busy executive in DC. He just packed up his family and moved, at least temporarily, to Smith Mountain Lake because he says, I don't know when I'm going to go back to work. So he bought a house at Smith Mountain Lake and he's moving in there. And he is enjoying life, at least for this summer. So I would say you're right, but I would say now more than ever, it doesn't have to be that way. So Cooking Simply says, how do you cook simply? What is the best way to find a good team for doing the BRRRR, i.e. contractors, agents, etc.? Just get involved in the market. Go to your REIA, the Real Estate Investing Association in your area. Get to know the people there, get to know real estate agents in your town, get to know other contractors, and they will plug you into the right folks. Christian Zanta says, can you help me get more cash buyers because I've been putting in a lot of sweat equity? Not sure how to help you with that, Christian. Not sure what market you're in, but you should definitely do the search in Bigger Pockets to see who else is within your 5, 10, 20-mile radius. You can do that on Bigger Pockets, and they can help more than I could ever do. REI James says, One Southgate Realty, everything changed because of COVID. See the opportunity, take advantage. Some people will move, but others will want to be in metros as well. Absolutely agree. Thank you. Great point, REI James. Okay, so what else do we have, Nikki? I'll let you search out a few questions. We probably missed dozens of them earlier. And while you're doing that, I will tell you that if you haven't joined Bigger Pockets Pro or Premium membership levels, I will tell you that in almost 30 years of being an entrepreneur, it is the smartest thing I ever did. Being part of Bigger Pockets has been the best community, the best experience I've ever had. And I highly recommend that you consider doing the same. Randy Stewart says, how can commercial business loans be used to purchase single-family rental properties? Trying to find ways around issues regarding a debt-to-income ratio being too high since tax deductions lower income on paper substantially. The only way I know to tell you is jump up, Randy, to a 5-plex or above. I don't know any other way to tell you that would work because commercial business loans generally are for 5-plex and above. I don't think that's very helpful, and I apologize. I don't have a better answer for you. Mark Franklin says, I know a lot of people are worried about renters moving out of the cities, but cities are always attractive to young single people who are usually renters. Yeah, Mark, good point. Good point. I would say that there will be a flight to suburbia at least, though, where there's still a lot of young single people. So Anna B. Garcia, hey, Anna, would you advise investors to apply for SBA loans or not? Yeah, I would. I hadn't really thought much about that, as you can tell. But yeah, I would say that you should consider that. There's going to be a lot of forbearance and a lot of forgiveness on these type of loans as things unfold. Now, it's going to be really, really hard to get that application in right now. But I've heard it's really hard to get anybody in the SBA realm to do anything. But Jared Stash says, where's your strongest performance market that you're investing in now? Don't worry, I won't tell anyone. Well, I'm going to tell you openly, it's not really a geographic market. It's actually in anything that's owned by mom and pops. Now, what's not owned by mom and pops? Big hotels. They're having a hard time anyway. Big retail, hard time anyway. Malls, hard time. Offices, office buildings, definitely not. What's owned by mom and pops? Self-storage. There's 53,000 self-storage facilities in the U.S. That's the same as Subways, McDonald's, and Starbucks combined. 76% are owned by independent operators. A lot of those are mom and pops. 44,000 mobile home parks in the U.S., about 39 to 40,000 owned by mom and pop operators. That's the strongest performance place I can find right now because there's massive upside to paying a fair price to a mom and pop seller and then improving it. It is the best thing I've ever done in business. And I wish I'd have found it earlier. And now everybody on here, all 10 or 20 million of you, I'm kidding, know my secret. So highly recommend that you consider investing where there are mom and pop sellers. Luis Rivera says, man, I wouldn't mind having a convo in person with you about self-storage since you're in Virginia and I'm in Maryland. Yeah, give me a call, Luis. You can reach out to me. Actually, I do a call on Wednesdays at noon Eastern. And if you can reach out in time to my Bigger Pockets profile, I'll give you that call-in number, and I actually interact with people one-on-one. I can only do so much of that, though. So Ricky Miller Jr. says, do you think it would be okay to do wholesaling first to build capital and then invest that money into real estate properties? I absolutely think that's a great idea, Ricky. I think you're on the right track. Wholesaling takes a whole lot of effort and time and sweat equity and driving around, but it can make you cash. Now, then take that cash and put it into real assets that you want to buy and hold. I think that's a great plan, and I think it's a great time to learn that business right now. Jennifer Blurton says, is there a resource I can find to determine how saturated the rental market is in my area? Yes, Jennifer. I think Bigger Pockets Insights would help, but I don't think that's the only answer. I would look up REIS reports, that's REIS, or IRR, that's Integra Realty Resources, and it will tell you what's called the, it's coming to me. I can't think of what it's called. So why don't we move on, Nikki, and I will try to remember to get back to Jennifer if I think about it. It's the absorption rate. Okay, it's the absorption rate, but there's another term on top of that. The absorption rate says, okay, it's going to take 1.5 years, which is kind of normal, for a new apartment building to absorb all the new units, in other words, to get rented out. If it's in a if it's a real high number, like 3 years, that's bad. It's overbuilt. If it's a low number, like 8 months, that means a new apartment building with 200 units would all get gobbled up in 8 months. That's really good. Look on an IRR or REIS reports. I'm close, and I don't know if they'll have your market covered, so don't pay a lot of money for that report till you know. Brian Kuhn says, I'm closing today. Yay, on a $1.2 million fourplex outside of San Diego. 0 down VA loan? What? Seriously? Do you think that's over leveraged or a good house hack? I'll be living for free. Well, I don't know if it's over leveraged till I see what the rents are. You're going to want a debt service coverage ratio, means your net operating income after paying all your expenses is at least 30% higher than your mortgage payment, your principal and interest. That's a 1.3x debt service coverage ratio. I'm pretty sure you have that or you wouldn't have got the loan. You really, with COVID and all the craziness coming up and everything that's happening, hopefully you have a 1.5 or better, Brian. Worst case scenario, you can go live. I don't mean to be sarcastic. Worst case scenario, though, you can move out and rent your 4th unit, and you'd have to maybe move in with a friend or something if that happened. That gives you a 25% margin of safety right there by adding that 4th unit. That's my opinion. Phaedra Robinson says, I have a property that I'm almost finished rehabbing and plan to do a cash out refi per COVID. Is that still a good idea? Yeah, as long as your metrics work, Phaedra. I don't really know enough to tell you from your question, but as long as the metrics work, I would get a really senior, older investor to help you make that decision. Angel Latimer says, what would be the safest route for real estate investing for a scaredy cat like myself not wanting to close to lose much capital? You should find the very, very best operator you can find. Through a crowdfunding website or through Bigger Pockets or through the Real Estate Crowdfunding Review, and you should invest with them. Find somebody who's got years of track record of making money for their investors. That's my favorite way to do it. Steph L says, is it common to buy wholesale contract flips with no inspection? Is this a risk worth taking? I've done that a bunch, actually, with no inspection. I got burned a few times, but overall have not had a huge problem with it. If you really know what you're doing, you can eyeball it. And if you can get a significant, and I mean a significant discount on price, that would be something you could certainly consider. Just be really careful. As a putting my realtor hat on, I will say you should get an inspection. One Southgate Realty, is that Southgate, Michigan? I used to live there. Says, is it common? Okay, so any good data analysis tools to determine if particular areas are good for commercial stores? I have a 7-Eleven and maybe a neighborhood Walmart in mind if the sellers and the county agree. You are really aggressive. That's fantastic, Southgate Realty. I don't know. That's above my pay grade. I think you should, I mean, honestly, you're going to have to go pay the $7,000 or whatever it costs to get a market study for your particular type of asset. You know, drugstores work in all kinds of places where, you know, like a neighborhood Walmart might not, or that you wouldn't want to do an apartment just because just check that out. Jay Orr says, what resources are there to identify owners and area of multifamily apartments? Skip tracing works. And we've talked about skip tracing. I talked about it actually on the Bigger Pockets podcast in late June 2018. I didn't say anything really intelligent. Don't worry about it. There's other things you can do as far as finding multifamily owners. I don't know, Jay, if I have a great answer for you. Look on the GIS for your city or your county. Kimberly Stewart says, can I get information on mobile home parks too? Yeah, you can just go to my my profile and you can actually ask for the ebooks on mobile home park and self-storage investing. Verna Littleton. Hey, Verna, welcome again. If so many people are in forbearance, what does this do for future foreclosures? I think, you know, like I said earlier, I really think, Verna, that it's going to drive them through the roof. And Aaron Amesta Chugi, I probably said it wrong, but he's a cool guy anyway. He really thinks they're going to spike. Check out this graphic. If you didn't see the first 10 minutes of the show, this graphic shows his prediction of pent up foreclosures that are going to hit soon, lines going straight north. I actually really do believe that, Verna. And so I hope that helps. I hope that doesn't happen. And I hope I'm wrong. I hope Aaron's wrong. Kimberly Stewart says, how do I become a member of Bigger Pockets? Before we close up here, get your pencil and paper ready. And we will hear from our good friend, Nikki, on how to become a Bigger Pockets Pro or Premium member, or how to get your own account. I think you probably know how to get an account or you wouldn't be on here probably, but Nikki will tell you either way right at the end. Global Woman Travel Healer. I like that. The SBA had a national webinar, many new virtual agents to help business folks. Really? Also, many mentors in wholesaling software, and the right group can save from defaults. I'm not sure what you mean there. Okay, thank you for sharing that. I did not know that. Southgate Realty says, thanks. Thank you. Thanks for being here, everybody. I can't believe I get to do this. I can't believe I get to be with you. And I'm just thrilled for the opportunity. So to Verna, to Bilal Shakai, and to Hardik, and to everybody else, thank you. Thanks for joining today. If you want to become a member of Bigger Pockets, you can actually view, you can do the pro or premium plan by going to biggerpockets.com and /membership-types. And that will be what you need to do. If you want to join me again on the show, we don't know when it'll be. If you can find us, you can join us, right, Nikki? Okay, so seriously, Anna Garcia, it'll probably be Saturday around July 11th, but I'm not totally sure. I cannot wait to see you all again. I appreciate you. I appreciate Bigger Pockets, and we will see you here next time. I'm Paul Moore, and this has been a show called Crisis Investing 101. Thanks.